Hi there, I'm Jill Beck, and I'm the host of Going the Distance with Go Long. I am with Leslie West of State Farm Insurance, and I'm so excited to have her here. I think this is a really important topic that we're going to be discussing because of the fires in LA, the hurricane season that continually hits the Southeast in particular, and obviously Hurricane Helene. And with Go Along, what we do is that we provide accountability coaching for women 40 plus so that they can take care of themselves. Why does this topic matter? Because women 40 plus are generally the ones making the decision around insurance and having to figure out all of these problems. And so that's why I thought this would be a great opportunity to introduce risk and address some of the quote unquote dumb questions that you think you're supposed to know just because you own a home. So, Leslie, welcome to the show.
Thank you so much for having me. I appreciate it.
Yeah. So, why don't you talk about how you got here?
Well, I have been a small business owner for the past, I would say, 3 years. And before that, another 3. I've kind of had an interesting career with State Farm. I started as an intern 25 years ago and have worked in a number of different roles, a number of different responsibilities, from claims to underwriting to leadership to agency. And I've kind of had my hands in a lot of different areas in insurance over the past 25 years. And now now I'm a business owner here in Rockford, Illinois.
Also, this is a good time to announce that this conversation is for informational purposes only. This does not
Absolutely.
constitute actual financial advice. So, what we're trying to do is to give you questions to inform discussions with your respective agents who are licensed in your
Yes.
state to practice. So, just want to make that really clear that Leslie's just here to kind of help inform you to have a better educated conversation
Right.
with your insurance agent, or when you're looking for an insurance agent for that matter.
Absolutely. Because each state has different rules, has a different Department of Insurance. So things that apply to us here in Illinois don't necessarily apply in other states. But generally, we're just here to give you some tips and some tools.
That's awesome. All right, Leslie, I mean, insurance really, how I look at it, it's really around like you're managing your risk because you're not going to have everything covered for everything.
Right.
What is the role of I think there's a lot of misconceptions about what role the insurance company plays in these scenarios, like particularly around home, auto, renters, that type of thing, like any kind of property insurance.
So you started this out perfectly. Insurance is really just about managing risk. So for the risk that you retain, this is your deductible, like the things that you're going to hold on. But then also, if there's a risk that's too great, then you're going to transfer that risk to the insurance company. That's like if you buy a house and if you have a mortgage on that house, you are required to at least have insurance to cover the bank's interest to protect the bank. So they will require you to carry a mortgage equal to, if not greater than, what your mortgage amount is. Now, a lot of times, if you don't have that amount of money in the bank, even if you do own your house, you transfer that risk to the insurance company and you pay a premium to us. And in exchange, we agree to this legal document where we're going to pay for a certain number of things in return for your premium. Now, what happens is that a lot of people aren't too familiar with what is in the contract. And that's what we're going to talk about here today. Things that you just assume is covered that may not necessarily be. And we don't want you to make that realization at claim time. We want you to at least have had the opportunity to review before.
Yeah. So as a result of what happened in LA, in particular with the fires, because we don't have typically a hurricane risk here in the Pacific Northwest, right, but we do have wildfires. And I spoke to my insurance agent and, we were talking about different coverages and we have earthquake insurance. But we're not allowed to get flood insurance out here in Washington State. Like they don't.
Really?
Yeah, they don't cover it for where we are, just in terms of the amount of risk it would cost for them to take on. So now, to be fair, the likelihood is fairly low. So it's just one of those things that you're assuming.
Yeah.
But we don't have flood insurance here, and and that's a thing that I think is important for everyone to understand where they live. Like, do they have like flood insurance or earthquake insurance, and
Yeah.
in addition to their regular homeowners policy?
So there are some things that you do want to talk to your agent about, especially there are different parts of the United States where different things impact, different situations impact this where you live. For example, in Illinois, there are termite inspections that we require that people have. So there may be some different things in your state that when you're buying a house, that is required by the lender to, at least in good faith, do that search. Now, with flood, the question that you want to ask yourself, not so much is it, how the policy goes, but am I at risk for it? So if you're in an area that you have water issues, or you have had you see water in your basement or things like that, you want to have a conversation with your agent, because the coverage depends on where the water comes from, the source of the water, whether it comes off the surface, whether it's coming up from the foundation, or whether it's coming from inside the house. Is it a backup versus a fill up?
That's exactly what happened with us, because we don't have flood insurance in the event of a natural disaster, but our insurance has covered us because our water heater busted.
Yeah, and that was internal. So that's something completely different. I think the biggest thing to take away from insurance, regardless of the company that you're insured with, or even what part of the U.S. you're in, is in general, insurance covers things that are sudden and accidental. So if you think of oops, those sorts of things are primarily covered. Of course, there's always going to be some things that aren't. But if accidentally my child drops something in the toilet and it gets stuck, or something just ruptures, breaks, it's sudden, it's accidental, we would most likely pay for that within, the contract language. Now, if it's something that it's an ongoing situation, or an issue like a dripping, a leaking, seepage, that kind of thing, if it's a long ongoing maintenance thing, like even on your vehicle, your insurance doesn't cover tune-ups, but you still need to do those sorts of things. You still need to maintain the car. You still need to get the oil changed, things like that. So it's the same thing with the homeowners, but a lot of times people misunderstand because of the dollar amount that's involved. It costs a lot more, but still a lot of that stuff is more maintenance than insurance related.
But I can also see, I could see myself making the assumption that because my flood was covered for my previous thing with the water heater, that if there was a flood from, say, outside the house,
Yes,
that I'd be covered. And what I learned when talking to my agent recently is that that is not the case.
One thing I ask my customers to do, and I do understand if it's on the evenings or the weekends and you're worried and you're panicking and you're not sure if something is covered, talk to your agent before filing a claim. Because a lot of times you can't undo that if there's no coverage. And in some situations, even claims that aren't covered can impact your rate. So if you don't know any better, like in your situation, you thought, oh yeah, it's water. We would pay for the water inside, and we got more water situations. It's on my property. You turn that in, it comes out zero pay. That could, I say could, my disclaimer, impact your premium going forward, even when it wasn't even covered. So that's something really important. And it's getting tough out there. I'm sure a lot of your viewers have experienced that, getting quotes. And it's pretty rough premium wise, because the insurance industry has really taken a hit due to natural disasters and weather and storms and all of those things.
Yeah, so that actually brings me up to an interesting point, because, we've heard there's been a lot of, talk about like insurance in Florida and in California,
Oh yeah.
and challenges of getting homeowners insurance. And, for me, with my finance background, I think that it's obviously, a multi-sided marketplace. And so, there's a lot that happens. Like, obviously, you have the state, as you said, like each state has their own regulations in terms of how they set things. And then the insurance companies decide on if it's a market that's like viable for them to operate in given the risk. Is there anything you want to kind of add to that? I mean, obviously this isn't a company statement, but just in general, like what do people need to think about in terms of their state when they hear that like insurance companies are leaving the state?
Right, right. A lot of times, insurance companies leave the state because they weren't collecting enough premium to pay your claim. So insurance, just think of it as a big bucket of money, and everybody puts in their fair share based on where they live, their age, their home value, their credit. There are hundreds of different metrics that come up with your personalized rate. So you're going to put in your fair share, and the state requires that each insurance company that does business in the state have enough money to pay your claim. We have to have the money. So if we don't, then we can be shut down by the Department of Insurance because it's not fair to consumers. You're paying all this money, the insurance company goes under, you have a claim. Well, what are you going to do now? Or on the other hand, you want to make sure, so let's say everyone puts in their fair share in this pot, and then all of a sudden, a lot of people have claims, more than what we anticipated. And now what's in it is depleted. So now we have people called actuaries, very smart people, and they do math and they figure out, okay, this is what we anticipate for the next year. This is where we anticipate being. This is how much we need to raise our rates in order to stay solvent so that we're able to pay our customers' claims. So now you got people that haven't had any claims that are experiencing rate increases. And then you've had people that have had claims that are experiencing rate increases. So a lot of times it's just, we just got to fill the pot. Now, the people that are having the claims statistically are going to have to put more in. Their rate increase is going to be higher than someone that hasn't. But generally, that's what's been happening. And a lot of companies, there's this line between we need to be competitive to be able to help our customers, but we also need to be able to collect enough premium to be able to set ourselves up to be able to pay that claim.
Well, yeah. I mean, I think what's happened, particularly in LA, right, with there's this one neighborhood that's been highlighted, is that a lot of people bought into that market early on. And now the replacement cost, which includes supply and demand for rebuilding, right? Because everybody in that area is going to be rebuilding and every general contractor is going to be booked for like the next.
You can imagine cost and demand, how expensive that's going to be now.
Yeah. Like the lumber is going to be expensive. Appliances are going to be expensive. Labor is going to be expensive. And so all of a sudden that makes the calculus even more complex.
Yeah. And there's a lot. California is its own unique situation, not like any place else in the United States. Well, each state is unique, but they've got some issues with their Department of Insurance. And not to get, again, I'm not licensed in California, and there's a lot of finger pointing going on out there, but the state regulates what those premiums are going to be.
Yeah. So that leads to kind of my next question. How often should you be renewing your insurance coverage? Is it only life events? Is it like an annual thing? What do you recommend to your clients?
We, in our office, we try to reach out to people proactively every 12 to 18 months because we literally just want to know. We want to come in and review everything. You'd be surprised. We find coverages that aren't matched. We find drivers that we should have had, drivers that we shouldn't have. We find stuff people thought was insured, fine arts, like expensive stuff that they thought we had insured that we have no record of, that we just happened to catch doing these reviews, that it's invaluable. In general, life events, think marriage, divorce, death, births, kids going to college, kids moving back home, retirement, there's all kinds of things that are going on. And that's a good time to come in and schedule a review with your agent just to look over everything and make sure it's still accurate. But also, just when you get that bill, when your renewal notice comes, just take a look at it. A lot of times people are just looking at the price and they're not really understanding the coverage. I think one of the big things that people don't understand is replacement cost versus actual cash value. Meaning replacement cost means we're going to replace your item. So your hat may have cost 20, $30, but if it's damaged, if it's burned in a fire and we need to replace it, that may be 50 now, that particular same one. It may be vintage, it may be super special. So making sure that whatever you want, if replacement cost is better for you, great. If you just have actual cash value and the hat is burned, that $30 hat, we may offer you 15 to 16 just because of the age. So that's something that a lot of people get very upset about if they weren't aware of that, how we settle that claim with you. It's cheaper to do it that way. But if that's not what you want come claim time, you want to make sure that you're getting the right coverage for your needs.
So you brought up specialty items.
Yes.
Firearms, jewelry, furs. We have a wine collection here, collectibles, cash. How do you
Painting.
recommend people approach that?
Yes. So homeowners policies, we insure the structure. We insure the things on the property that aren't attached, like detached garages, fences, pools, sheds. But then a lot of policies are package policies, and they offer a couple of different, in addition to what they offer on the house and your personal items, sometimes they offer special limits on things like cash. If there's a fire, I could tell you I have $575,000 in cash under my mattress. Prove it. There's a limit for cash. There's a limit for some things that they're just specialty items and there's better coverage for them. So jewelry, unique items, antiques, they are covered as personal property most of the time under your homeowners. But if you want, you just want to check and make sure that the amount that you have is adequate for the items that you own. So that, yes, a lot of times you don't realize it's only $2,000 for coins. Well, I have a coin collection. I may have 50,000 in coins, and I will be very upset to know that I'm only going to get 2,000 from 50,000.
So, someone has a house, they got furniture, they got clothes, they got electronics. Let's assume there's nothing like specialty in there, right?
Yep.
But no one has the receipts for everything. Like, I sure as heck don't have the receipts for every purchase that I have made of, any object that's in my house.
Yes.
So how do you handle, what could anybody do? What could everybody do to kind of like help themselves in terms of, inventorying those items?
Yes. Well, the beautiful thing about technology is that there's usually some kind of record. Like, where did you order it? Where did you buy it? There's usually a paper or an electronic trail to prove that you had said item. If you had a television that's as big as this wall and it was stolen and you have no proof that you owned it ever, not even a hole in the wall to hang it from, well, that's a different story. But if you purchased it, you probably would have something on Amazon or some sort of proof. Old school way, people used to go through the house and just videotape what you got or take pictures. Yes, you can do that just to show that you have it. It depends on the insurance company and how they want to handle the loss settlement options. And that's something else too that you just want to make sure I know what I've got so that if something happens, I can easily describe what it is. Now, I'll tell you right now, I'm an agent and I got stuff that I would probably be pretty hurt if anything happened to it that I don't have a proof of purchase on. And I'm not saying you have to go do that, drop everything and go do that. Just think of, in big terms, think of the big items and kind of work your way down. Most importantly, what's the most expensive thing that I have that I just want to make sure that if nothing else is covered? We're not going to ask you for receipts for your dishes and your plates and your clothing, that kind of stuff. But the bigger items, maybe the more expensive electronic ones, you just want to make sure that you have some sort of record that you had them.
Got it. Got it. So one of the things that I find fascinating, there's the deductible, right? And sometimes you can have more than one deductible for like what you would consider to be the same event, but maybe the insurance company.
Yeah, that's new with us. For us, it's new. We started doing that this year or at the end of last year. And a lot of companies have done it for a lot of years. That's something really important to keep an eye on. A lot of companies are including a different deductible for different types of losses just to save money and keep that premium and those rates down. That's why we do it. So a fire loss, your deductible may be 1,000, or you may have a percent deductible. Whereas if it's wind or a hail claim, you may have a higher deductible because that's maybe something that the insurance company has stated. So just make sure you're looking at your declarations page and that you're aware that the deductibles, if it's different, what is the different for? So you're aware.
Well, it almost sounds like you should have a conversation. So, like, you live in Illinois, so I guess tornadoes are a thing for you,
Oh, yeah.
right? And so, understanding, like, yeah, fires can happen anywhere, right? But what would happen if a tornado comes in? Alternatively, if someone is listening to this on the East Coast, it could be okay, what happens with a fire, particularly if you're near the water? What happens with a flood? But what happens with a hurricane? Like, if something is deemed a hurricane, are those discrete events that have different deductibles and different coverages that you need to be aware of? Like, just having that awareness, it sounds like that's a thing that people need to
Yeah,
understand.
and then I go back to that review. That's why it's so important to sit down. If you can't figure it out, and we're not expecting anybody to, I look at insurance documents all day. This is what I do all day. So I can quickly get to it and know exactly where to find it. Whereas you're doing something else with your 8 hours or 10 hours or however many hours you work. So that's why it's important to just sit down, or even I do appointments over the phone, or we do like Zoom meetings, those two, if you can't physically get in there, or even email. I've had some people say, just tell me what, if there's any problems or anything that could cause a problem, just give me the main points too. I've also done that because people just don't have the time, but that's why it's just so important to look at it just so you're aware ahead of time.
How often don't people know what their true deductible is when crisis strikes?
A lot. And I think because when people turn in claims, and let's say you have a $1,000 deductible and you turn in a claim for $1,100. So we pay out $100 to you, and now your rate goes up hundreds of dollars because of that small little claim, and just weren't aware of, hey, this could impact me. And again, if you deplete that bucket, if you took your part and you took some out, you're going to be expected to put a little bit more back in because you already had a claim. So those are all the nuances that people don't necessarily think about. Now, don't get me wrong, I'm a consumer too. I've had issues, homeowner claim issues with hail and flooding of my basement twice due to circumstances outside of my control. It was a city, but you just want to make sure that it's covered and that you understand the risk, what could happen for turning in claims, especially on the little claims where you might have to put in more layer.
So that sounds like one of those things like you talked about earlier, where before you do anything, call your agent to find out what the skinny is on your policy to see if it makes sense to like file that claim. Because once it's done, it can't be undone.
And here's another thing I don't think people realize, and this is just me talking as a consumer.
Right.
A lot of times people will call the insurance company. They'll call in the evenings and, get the after hours people or turn in claims because they think the insurance company is one that's going to send you help. Our contract is with you. You get to choose any vendor you want. So if you have water in the basement and you call us at 2 a.m., we're going to take that call. But we're going to ask you, who do you want to come out? We'll give you some options, but it's up to you. We aren't the ones that are coming out to make the repairs. We are paying you, or with your authorization, we pay your vendor to do that work. So the choice is yours, who you want to use, at least where I'm at. Now, I don't know. Again, that's my disclaimer. I'm not sure what the rules are in other states.
It's like, we called the plumber and they're like, all right, call the insurance company
Yeah.
and tell them you want this remediation company. And called, and I mean, in Washington, this is a well-known remediation company. It was like, it's a thing. And I mean, they were great. Like, but yeah, we said that to the insurance company. We're like, hey, we need this. And we were told this is a great remediation. I didn't even know what remediation was in this context. And, but they were incredibly helpful and saved a lot of more damage because they acted so quickly and they knew exactly what to do, which saves everybody money.
Absolutely.
So is there anything to think about with renter's insurance? Like any additional considerations? Because in Seattle, we have a lot of people who rent. It's a high buy-in here in Seattle and a lot of the West Coast cities.
I think a lot of times the landlords will require renters insurance only because it protects both parties involved. It not only protects the landlord, but it protects the tenant too. If you live on the ground floor or in the basement and there's water damage to your personal items, who are you calling? The landlord. And you're going to expect them to fix that. And they're going to tell you. And then people are mad and it could cause a dispute. Whereas if you have renter's insurance, depending on the claim, my disclaimer, depending on the cause of loss and what happens, you're transferring that risk to the insurance company instead of retaining it, because the landlord isn't going to fix your items. Their coverage is for their building. You still have to protect your things and your liability. So if you own a pet, if you have children, you have a bike, you have whatever it is, if I fall asleep and I'm smoking a cigarette in bed, and not only do I set my unit aflame, but each side of me, that's going to be on you. And then also there are some policies you need to check in your state that pay for loss of use. So back to the people in California right now, they have insurance, but their homes aren't rebuilt. So there's provisions in that policy, both in renters and on homeowners, that will pay to put you someplace else until we can get you back into the home. Very important in times like that, especially if it's mass areas that people are losing their homes and don't have anywhere to go, that your insurance company can pay that if it's in their contract language.
Right. Okay. Let's talk a little bit about the bundle. Right. And State Farm is favored for their bundles. The commercials are everywhere. You got your Super Bowl team in there. So is it better to bundle, leaving out Patrick Mahomes and the State Farm guy?
Right. We're not talking about any of that. So it's just like anything else. And I heard someone else, I cannot take credit for this explanation. So I forgot who told me, but I use this example all the time. Let's say it's lunchtime and you're hungry. So we're going to go to this place to get my burger. Then I'm going to go over here to get my fries. Then I'm going to get my drink from here and then pull up to the gas station and get my dessert. At the end of that meal, you would have paid more than if you just went to this place and got it all. It's the same concept. We know the more accounts we have with you, the longer you stay, especially if we take care of you. So we're going to give you a discount because the risk is lower because we have it all. And we know everything that you have. So it's the bundle, and it doesn't matter what company it is, but they all have discounts for keeping it all together. Now, there are some situations where you can't, but just know it's always good to ask and just have them run the numbers, and then you can decide from there if it's worth it. Or at least it's one place to call instead of having to call different places, and you can keep it all together as well. There's benefits to it.
Sure. Now, I have a home business. I have it insured separate from, and I run my business out of my home, but I have separate insurance for that.
Okay.
How often do you find that people, whether it's a side hustle or it's a full-time job that they're running out of their house, that they feel like, oh, it's already covered under my
Yeah. Yeah,
home
that's
insurance.
that's very important. Um, if a lot of times your homeowners and sometimes even your renter's insurance, you can add a rider or something that will protect your business interests, depending on the scale and the scope of your business. Let's say I am selling cosmetics and I have my inventory at the house and I have people over and we do makeovers and we do all these wonderful things. Depending on the level of risk, you can just add a rider and have insurance to cover that. So people get hurt on your property, or if maybe your items are stolen or damaged in a fire, there's coverage for that. Or you can even separate it if it's a more of a risk that's designed on a homeowners, you could do a separate policy as well. But it's really important to know if you thought you had business coverage, especially liability. If you got people coming to your house for stuff, and even if it's just to pick things up and someone falls down and gets hurt, you could put your business at risk if you don't have that type of coverage. So usually, depending on, talk to your agent, talk to your insurance company about the type of business that you have and if it's eligible under your current coverage. If not, at least get a quote and see how much it would be. And if it's worth it, do you want to retain that risk or do you want to pass it on to the insurance company if anything happens?
All right, I think we covered kind of like I have a claim, what happens now.
Yep.
Is there anything
Yep.
else you want to add to that? Because I think that's pretty important for people to understand. Like, oh shit, my car was stolen, or my car was
Yes,
broken
I am such a
into.
fan of talking to your agent first before you turn in a claim. We have saved people a lot of heartburn and heartache just by having a conversation. We do not, we won't stop you. We just want to have a conversation so you're aware of what could happen. Insurance it's rough out here nowadays. And we just want to make sure we're putting you in the best position, not just now for this claim, but in the future, a year from now. Have you had claims before? How many have you turned in the last year? That's a big indicator of what could happen. You may be putting your policy at risk. If you had 4 claims in 2024 and now you're turning in another one in 2025, I'm not sure what's going to happen. Because again, if you're depleting that pot, the company could just take you completely out because you're taking too much out. And that's what happens, what we've been seeing happening quite a bit, to keep it low for the people that don't have claims. So it's unfair on either side if you think about it. I pay my premium, right? As a customer, I pay my premium. I haven't had a claim in so many years, and all of a sudden I have a claim. I have a couple of claims. They're not my fault, or maybe they are. And now you guys want to get rid of me. But then you have people on the other hand, never had a claim, never turned in a claim, and my rates are going up. So it's sort of, you darned if you do, you darned if you don't. But if you at least know what that is before you do it, it goes down a little bit better.
Okay. Leslie, is there anything else you think that's important for people to know? I know you're in the business of educating people, and I really appreciate that, especially through our mutual friends at Purse Strings.
Mm-hmm. I think we kind of covered the gist of it. Again, I'm making a commercial. Talk to your insurance professional. Just have a conversation. 1 hour can really save you a lot of heartache later.
All right. Well, for the people in Illinois, we will put, we're going to put Leslie's contact information in there. And for someone in Illinois, she's
or
licensed.
Wisconsin. I'm licensed in Wisconsin too.
And Wisconsin. Okay. Illinois and Wisconsin, she's licensed. So anyone can contact her there. Leslie, this has been very informative, very fact-based, and very practical, which is like what we want to do here at Going the Distance, so that this way people are more educated and informed. So thank you so much for joining this show. And again, just to wrap it up, this is Going the Distance with Go Long. Go Long is an accountability texting service for women over 40 with autoimmune. What we're here to do is to help make your life easier so that you can go the distance and live the life you want to live. So Thanks for joining. And
Thank
Leslie,
you
thank you
for
for joining.
having me. Everybody have a great time. Have a great
All
night.
right.
Thanks.
Thanks, everyone.